8:30. I'll call the October meeting of the Finance Committee to order. Roll call, please.
Bruce Paulson.
Here.
Don Pettit.
Here.
Ron Kinsley. Tom Duffy.
Here.
Stacy Hessel.
Here.
Okay, very good. Thank you. Pledge of allegiance, please. I
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Okay, we've complied with the open meeting law, Madam Clerk.
This meeting has been noticed to the public and news media as required by section 1924 of the Wisconsin statutes.
All right, any comments on the meeting agenda as it is? Clifton is going to be on it at 9 o'clock, so we'll have to jump around a little bit if that's okay with everybody. Okay, public comments. Ms. Zillmer, you have a public comment.
Good morning. This morning around 7:30, I sent an email to the committee members, county administrator, county clerk, and the county board chairman regarding a couple of issues, but primarily with a request that the finance committee have more of an active role in vetting some of the financial implications that are acted on by other committees. There's a functional role for committees, such as in public works, looking at highway, airport, and things like that. But I understood that the purpose of this committee was to keep a sharper focus on the financial impacts. In my email this morning, I'll let you look at it at your leisure afterwards, but it addresses the amount of the hangar leases, both a calculation of rate increases on the old leases and then the base rate for the new lease, which the county board approved a few months ago. So again, for a future agenda item and maybe amongst other committees, I think the economic impact or the levy impact of decisions of functional committees often need to come through this committee for a sharper look before a decision gets made. And then I would also ask to be recognized later in the agenda when you get to your operating budget update, specifically with the EMS levy, and if you talk about the library payments. Thank you.
Okay, thank you. Okay, we've got the minutes of the September meeting before us. I'll entertain a motion to approve those minutes unless somebody's got changes, additions.
I'll make a motion.
Okay, motion's been made. Is there a second? Motion's been made and seconded by, let's do Mr. Duffy. Okay. Any discussion? All in favor, aye.
Aye.
Opposed, nay. Motion carried. Okay, the American Rescue Plan Act funding.
The only update we've got on that so far is the change in the reporting deadline. We were supposed to file a report by the end of October. That's been delayed till the end of January or December. January. Still awaiting the final rules. So we don't expect those probably until the end of the year. Actually, we've gotten some word on that. The comment period is closed. They're still reviewing a lot of information. They did say that until the final rule comes out, if we make a determination on something and then the final rule comes out that contradicts that, we would still be under the interim rules. If we took action under the interim rules, those would apply until the final rules come out.
Perfect.
So that's what we know about Firewater.
Okay, and I know that I was at the Housing Authority meeting and they want to talk to you about two duplexes on Somerset down in Bass Lake to try to get funding for those workforce housing units. So Sheila will probably give you a call.
Yep, we emailed back and forth, haven't
Right.
caught up to each other yet. Yep.
Yeah, I told her just go sit down with you and hash it out. Okay, any more questions on the American Rescue Plan or anything? Okay, then let's, if it's okay with everybody, let's look at the Finance Department budget.
Just a minute, please.
Oh, sorry.
the letter A, voting machine funding request.
Oh, I'm sorry.
The village of Radisson reached out to me and shared some information. They're asking the county to help purchase the voting machines. I guess Russ County is purchasing voting machines for the towns in Russ County. So they would like to know how come Sawyer County doesn't do that for the towns in Sawyer County.
All right.
I did tell them that the ARPA funds would be able to use, the townships can use that money, and they're checking with their legal counsel to see if that can be done. So I told them I would bring it up to finance.
Okay, Ms. Finch, you,
I do know that some county municipalities are planning to use ARPA funds for it. They're individual municipality funds, ARPA funds for that, but I don't know that there's a specific rule in there written, according to Andy Phillips, saying that ARPA funds can be used. It's gone back and forth. It's unclear, much like Mr. Huff just mentioned. If it's unclear, right now, we don't have a clear ruling on whether ARPA funds can be used. I do know a machines start at about 3,500 and go up to 6,000 to 8,000 each.
Mr. Hoff, have we researched that?
Not officially yet, no. And I don't see anything specifically in the rules that talk about voting machines. That what you have to do on any of these is tie a nexus back to the COVID. If it's COVID related, it will probably qualify. So, a purchase of a voting machine, a replacement, of a machine that you had before, is that qualify? I would hesitate to guess at this point. The other point is each of the towns does have funding, ARPA funding, to use, and can they use their own funding? There is advantages perhaps in county funding, and that the machine could be consistent across the county, but it's not a county obligation to purchase voting machines for towns.
So Ms. Hessen,
Who paid for the voting machines pre-COVID? Just the
Individual municipalities
Right,
purchase their
so-
own.
They're just
So-
asking.
I just was wondering, so we're setting a precedence if we start paying for everything. If they've already paid for it pre-COVID, I don't think we should use the COVID as a handicap to prevent people from functioning the way that they used to. So
Mr. Duffy, did you have a comment?
I kind of agree with that.
Okay.
I don't know, how many machines are we talking about countywide?
Well, there's 21 municipalities. Several of them have more than one machine based on population. So the total price range would be close to 60, 70,000.
Just don't have the extra money.
Don't we presently, the county, when they have to get the programming for each election, doesn't the county pick up some of that?
Yes, according to statute, for programming machines, unless the municipality has a race or contest on the ballot, they help participate in the programming fee. Otherwise, we do, which is again, tens of thousands of dollars for each election.
And we charge the township $1 per voter.
For certain things, each has an MOU that whether they do some of their own work or I do their work for them, it splits out accordingly.
Plus the voting list comes from the state for each municipality.
Correct.
does the election committees decide what machines that you can and can't use, or is it that each township?
Wisconsin Election Committee certifies certain programs and equipment. We currently use Dominion software for hardware, and they have a choice of an ICE and ICX or an those are the two machines now. The Edge is getting phased out. That's the oldest machine. So the other
That's
two are
one
being
of the-
replaced.
Paper
That's-
goes through.
Yep, that's
I like
the
that
hand
one.
punching one. And they're going to different tabulators.
Okay. Ms. Zeller, do you have a short comment?
Yes, I do. Maybe Mr. Kinsley remembers, but it seems to me some years back, the county did do a bulk purchase of voting machines and worked out deals with the town. So there may be some precedent that the county did purchase machines on behalf of towns, but I can't, in my memory bank, remember when that was.
Yeah,
I'm
I don't need-
thinking though that maybe they helped arrange it so that they could get a discount. And the discounts are still applied this time around. They are giving each municipality a discount on the machines because of the volume that Sawyer County went in with.
Yes,
I was the town clerk at that time when we purchased the voting machines. The towns bought their own. They were $6,000 a machine. And then we got a grant from the state.
Okay.
Thank you.
all right. Any more discussion? So you're okay with? All right, very good. Thank you.
Thank you for your time.
Sure. Okay, let's go to 9B then, the finance department budget. Mike, Tom, do you want to explain what we're doing?
We'll let Mike talk today.
All right, so the actual report in the agenda is down under 10B that we're looking at. 9B was just the finance department, but I added some other departments that are kind of under the jurisdiction of the finance committee. So if you scroll down to the report that's under 10AB, that includes some of the other departments. So it'd be like finance committee, treasurers.
All right,
But as far as just, I'll go through a few of these briefly. The accounting budget is up a little bit. There's a little bit of a change. In the 2021 budget, we transferred the payroll position from the clerk's budget into the accounting budget. Now in 2022, we're budgeting that position to go from a 7-hour-a-day position to an 8-hour-a-day position.
40 hours a week.
So the wages and benefits are up a little bit relative to that. Plus next year I have to, every other year we have to do an appraisal, an OPEB appraisal, and we're due again next year for that. So that's $3,500 more. Treasurer's budget, same kind of scenario as the accounting budget. There's 2 staff members in that department that are 7-hour-a-day. We're budgeting both of those positions now at 8-hour-a-day positions.
Is that changing from 7 to 8 just in the finance related areas, or is that across the board?
It's just those 2 departments that I'm aware of.
Okay, you want to
Well,
discuss the rationale of that?
well, there's one in the clerk's office also that we're budgeting at 8-hour-a-day position.
Okay. So what's the rationale for going 7 to 8?
Well, I don't, that was,
I could.
Yes, go ahead.
When I became clerk, they moved one person out of our department
Right.
completely, so we lost one full person. Where there used to be 4, there are now 3.
Okay,
And it's very difficult to cover with vacations, absences, etc., and the workload.
okay. So you're going to get coverage from Mike's crew.
No, our 3 up in the treasurer's office now
Oh, okay.
cross over and assist
All
in
right.
certain functions, not all functions, but just certain.
Okay.
ones.
All right.
I think there was a concern with the amount of work.
And, okay, this, all right, same with the accounts payable person.
Yeah, that's in the clerk's budget.
Okay. All right. So it's the payroll that you,
That's the one that we transferred.
right.
Yes.
So we just went from 7 to 8 for the payroll person in addition to somebody to cover the clerk's
Mhm.
window, I guess.
Okay. The other budgets under here, the auditing fees I kept the same, financial fees I kept the same, insurance we kept the same. Not sure where insurance is going to come in yet. We don't usually find that out until December. I'm not talking health, I'm talking liability and property insurance. Contingency is set at the same level. Debt service for 2022, the debt service is up a little over $400,000 from what it is this year. That is in line with the 5-year plan that we had. But I do want to say the levy amount right now is set at $1,190,000. That is subject to change. A little later in this meeting, we're going to be looking at a resolution from the Bureau of Public Lands or whatever they're called. Once we get approval with that, then we go back to them, we'll get the final amortization schedule. So these numbers are ballpark right now on the debt for that one piece of debt.
So are we anticipating borrowing any money for the courthouse in 2022?
Well, I think the plan is to borrow in 2022, but there won't be a payment on that debt until 2023.
Okay, then they'll hit the budget at that time.
Yeah.
Okay.
And then CDBG stuff, there's no levy involved there. So,
Right.
And then there are some revenue accounts that I meant to put in your packets and I forgot to. The main ones that we tend to focus on, the stumpage revenue. We're budgeting $1.8 million this year, 2021. 2022, we bumped it to $1.85 million, so we increased it 50,000.
Okay, Greg was okay with that?
I think so. He's looking at just this year, we budgeted $1.8 million. Right now, we're at $1.7 million.
Right, we're gonna go. over.
And typically, November and December, we get a lot of revenue in, so.
Yeah.
We should exceed budget there. Sales tax, this year, we're budgeted at $2 million. Next year, we budgeted at $2.2 million. We think that's conservative, but we want to be a little conservative on that number.
Okay. The treasurer's okay with that number too.
Yeah, she kind of lets us budget that number.
All right, so you're responsible then. Okay.
Otherwise, all the other revenues that we monitor and budget for are in the same ballpark. Diane has let us know that interest on investments is probably going to go way down next year. Interest rates on savings accounts and CDs is down quite a bit. So we did reduce it a little bit, but it's probably not comparable to where interest is actually going to come in
Okay.
for the end of next year.
And the land sales that we're going to approve, I would think at the county board, that will be 21 budget.
Yes.
Okay.
Yeah, so I don't remember what the number was, 400 or something.
400 something.
Yeah,
This-
402,
this
410.
So if we take the money this year, it will go into this year's budget.
Right,
She's kind of informed us that next year, the land sales are probably gonna be pretty light. She's not anticipating many parcels to sell next year.
so we budgeted accordingly.
Yeah, so we tend to, let me see what we budget 50,000 and try to keep it flat because some years like this year we're way over, but
Right.
other years we don't make it.
We're under.
Yeah.
Okay. All right. Does that take care of your comments?
Yeah, unless you have questions.
Yeah, anybody questions or comments for Mike or Tom? Okay, this is not an action item, is it? This is just an information item.
Yeah.
Okay. All right,
Yeah, so all of the budgeting information you're hearing today are our budget, the administrator's budget, and then when we get to the county board presentation next week, then it'll become the county board's budget.
right.
We'll go through another round of committee meetings, public hearing, and then our budget adoption. That's what-
All right. Come on in. Have a seat. Just in time. Yeah.
If there's any questions, I'll just.
Should we let them get organized and maybe, or
No,
the next section is pretty long?
Yeah, we can. Take a minute here. Okay.
I guess in the meantime, we can introduce them. I think you probably know them. Nicole Anderson, Clifton Larson is the partner, I guess, call it.
Yep, yeah.
Some of you probably recognize Melissa Roach.
Yeah,
She's worked on our audit this year.
Good.
The senior in charge of the project, so we welcome you all. Maybe we should go around the table and introduce some county board members. I don't know, Stacy, you want to just start? And
Stacy has the county board member.
Stacy,
Bruce Paulson.
Yeah.
It's just one county board members. Okay.
Ron Kinsler, County.
And Tom Ducky.
and then we have Dawn online.
Yeah, Dawn? There you
Hi, nice to meet you.
go. Hey.
It's really loud.
Okay, so do you want to just start off or?
Yeah, I guess we can just jump right on into it. And I believe you should have the executive audit summary available to you.
Sure.
And so we have obviously gone through the audit field work, drafted the financials, and then this is the audit summary pulling the key pieces of information for the financial statements into this high-level summary here. So this is what you've seen in the past if you've been here before, and we'll go over that. We won't go over everything in here, but if you do have any questions, certainly let me know. So we'll go to page 1, which is the audit findings and just high-level results of the audit. So the second paragraph there is the audit opinions. So there's 4 different types of opinions, and we are going to be issuing an unmodified opinion on your financial statements. And so that's the highest opinion you can receive. It's considered a clean opinion. It means that your financial statements are in accordance with generally accepted accounting principles and all the accounting standards that we need to follow. Then as we do go through the audit, we are required to note and report to management and governance any deficiencies or concerns we see in internal control. And then as part of your audit too, because of the funding you receive from the federal and state government, we also are required to report on compliance with that funding. So the next couple paragraphs relate to the results of that piece of that part of the audit. And so in the internal controls section, you will see that we do report 2 material weaknesses. And these are very common material weaknesses that we report for the governmental entities that we work with in Northwest Wisconsin, just kind of due to size and makeup of staff and that sort of thing. And so you'll see here that we have limited segregation of duties, which is one that you have seen in the past. It's been relevant. And again, that's just kind of due to the size and makeup. And what that means is that in the different accounting processes, receipting, disbursements, payroll, one person shouldn't really have access to the different parts of that process. So they shouldn't be able to initiate the transaction or to report on it or reconcile it. Again, because of the number of staff that you have involved in the different processes, it's not cost effective really to hire on more people to maybe split some of those duties further. However, the key is to continually assess those processes, and you can have mitigating controls. So reviews of certain things and that sort of thing. So, reviews of disbursements and that. So to continue to do that and try to mitigate the chance of fraud or error occurring. So the second one that we report is material audit adjustments. And this one is one you've seen in the past as well. So either one of these are not new. They are ones we've reported in the past. And really there's minimal audit adjustments that we have to do overall for the county. Mike does a really good job in his role and with staff that he has. So but we do just help and assist with some audit adjustments, mostly due to some quirky accounting standards that are out there. So we assist with that because of, we have that expertise in the area. And Mike probably would say he doesn't have the time to maybe, dive into more of that stuff. So again, very common findings that we have in report for most of the counties and municipalities that we work with due to the size and makeup, and you guys just looking to us for that expertise and assistance, really. Then the last paragraph on this page is the compliance part that I mentioned due to the funding that you receive from the state and federal government. And here we do not have any findings to report at this time. So, are there any questions at this point in time? Otherwise, we can dive into some of the actual numbers then and results for the year. Okay. So I'll pass over. The next few pages are what's considered the formal required communications to governance. It just kind of goes through some of the high level things we're required to report to you as far as the accounting policies, estimates that might be in the financials and that sort of thing. So, but if we move on a few more pages, page 7 is where we jump into some of the actual numbers here. And so here you'll see that we show 4 years of results just to give you a picture of how things have changed over the last few years and if there's any historical trends you can see. This item number 1 that we're starting with is your general operating fund. So this is where, the main operations of the county resides and the activity is. We start off on the top here with the balance sheet. And I'm not going to hit on a whole lot of the lines here. Many of the changes from year to year are just truly due to timing at year end. Because, maybe if something is paid before year end one year and then after year end a different year, it can just kind of, move cash a little bit or sometimes waiting on certain grants and that sort of thing from the state will change your balance sheet accounts from year to year. So what I would kind of want to point out is really the overall results of everything is your assets less your liabilities. It's called your fund balance. And so that's really what's available to you. That's what's accumulated over time. And so if you go to kind of that bottom section of that top half, you can see the fund balance section. And so overall, your fund balance for the general fund increased 1.4 million this year. And so that's a combination of a few different factors going into it. You had budgeted a deficit, and so obviously adding to your fund balance is a positive result going into the year, thinking that you were going to have to take from fund balance. And the reason you were able to add to fund balance is that overall your revenues ended up about 1.3 million over budget, and that included increased sales tax from prior years and just sales tax greater than what you budgeted for. You received some COVID funding. Obviously, you had some offsetting expenditures to that, but there was COVID funding. There was additional Board of Prisoners revenues, although there were some increased expenses with that too. Stumpage was up for you, and then some sales of tax deed properties and some miscellaneous revenues that were that helped you be above budget for your revenues. And then on the expense side of things, you ended up $400,000 under budget. So with that accumulated activity, that's where your final results were the 1.4 million being added to the budget or to the fund balance.
Any comments on why the fund balance committed changed so much?
Yep, that's right where I'm headed. You're leading
All
into
right,
that
yeah.
as far as the different pieces of fund balance, right? And so we've talked about this every year as far as your overall fund balance is at 7.8 million, but there's the different parts or categories of that. And so we really take out the non-spendable items of 2.2 million. And what that is that relates to like the delinquent taxes that you have in your assets, prepaids that are in your assets. So that funding is not readily available or it's already been spent. for future. And so it's not really considered available or spendable part of fund balance. So that's taken out of there instead, or separated there. Then the committed fund balance that you mentioned mostly relates to if you do apply fund balance in your budget. So if you're not able to balance your budget and you there's a deficit. So in the past few years, you've had to utilize some of that fund balance in your budget to balance it. And then the assigned portion is taken out of there as well. And so this is what the board has designated a portion of fund balance to be used for. And what most of this balance relates to, about 640,000 of it, is related to sick leave benefits or benefits that your employees have earned at this point in time that will be paid out in the future. So that's good to set that aside, knowing that, that's an expense that will have to be paid. So what that ultimately leaves you is that unassigned fund balances. So that's what we consider truly available fund balance. And you'll see that increased quite a bit from last year, and you're at that 4.2 or $4.9 million dollars. And so how we kind of gauge what that means and what that looks like is we compare it to your annual expenditures, that unassigned fund balance. And your policy is that you want that between 20 to 30%. And our general recommendation and the GFOA recommendation is about 25 to 33%. And you'll see that percentage there is at 35%. So last year it dipped down quite a bit, but you were able to bring that back up. So at that 35%. And the counties that we work with in Northwest Wisconsin probably average about 35 to 40% in that result. Yes, certainly.
Back to the committed question, Bruce.
Yeah.
The reason that dipped like it did was when we switched from applying fund balance to we started borrowing for capital.
Right.
We did not then need to apply as much fund balance because
Mhm.
that's what's causing that.
Okay. Thank you.
Okay, anything else then, or that's the high-level summary on the general fund? Then if we go to the next page, item number 2 is your special revenue funds. And so this is, you have quite a few special revenue funds here, and I'm not going to hit on most of them. But what special revenue funds are considered kind of self-sustaining funds. So they're where you're recording and accounting for kind of separate activities. So the revenues coming in will be used for those particular purposes. So obviously the biggest one is your Health and Human Services special revenue fund. And so you'll see that that fund, and so what you're seeing here is their ending fund balance for each year. And you'll see that the Health and Human Services did drop about $700,000 there. That was kind of expected going into the year, knowing of some high cost needs that were out there. And so just with some increased expenditures that to provide those services in 2020 resulted in that decrease. Otherwise, most of them are pretty low balances or small activity. And again, it's usually for grant related items. You might be getting the grant funding in, and so you're just accounting for it separately, and the expenditures are within these funds as well. I don't know.
Do we have too many special revenue?
You have quite a few compared to a lot of other counties that we work with, but there's obviously pros and cons to each. It's very easy to designate it or to distinguish the activity then, and others just might put it in the general fund in a different department or project or something like that. But I mean, there's no rules or regulations on the numbers, so.
And I've been doing that, pushing them to the general fund.
Yes.
Some cases I'm getting pushback on it, but I'm trying to eliminate how many we have.
It's good to be transparent.
Yeah, you can easily see then the activity of each of, or the activity of each of these operations. So But otherwise, I don't have anything specific that I was really gonna touch on these. The next reporting fund that you have is your debt service fund. And so this is generally close to zero balance because you just levy or transfer into here the necessary amount that you need to pay your principal and interest annually. And so the levy that you brought into here covered $246,000 of principal payments this year and about $30,000 of interest payments on your long-term debt. And I'll cover a little something different with debt later on as far as your debt limit and that sort of thing. So item number 4 is your capital projects funds. And so here you'll see this is where you either issue debt or transfer funds in normally to pay for certain capital projects and equipment purchases. And so these will obviously change from year to year, ups and downs, depending on your capital needs and that sort of thing. You'll see the very last one issued was more of a, up to this point in time, you had for different purposes, the capital projects fund, where this, you added a separate capital projects fund this year for the one debt issue that you had at the end of December for $990,000, and then that will be spent down in 2021. So, and that's for a variety of things as far as some highway needs and squads and that sort of thing. So. Item number 5 is your enterprise funds, which your highway department is accounted for in this type of fund. So here we show a little bit more detail of the highway department balances. So we start with the balance sheet, and you'll see that cash did decrease a bit there. And I've been seeing that quite a bit for the counties this year, where the cash has been decreasing in the highway department, and that's you know, because you're spending the funding for some infrastructure upgrades and equipment needs and that sort of thing. And then otherwise, what we focus on here is your overall net position. It was positive before the infrastructure upgrades transferred to the governmental accounting or governmental activities. And so, I mean, technically your taxes and grants and funding coming in did cover the operating costs in the fund and for the operations. Similar to what we look at in the general fund of the unassigned fund balance, here in this type of accounting and reporting, we look at what's called the current ratio. And so that's your current assets to your current liabilities. So your liquidity, and you hope that that's at least 1-to-1 ratio. And you'll see here that that ratio has been going down the last 4 years, but you're still above that one. You're at 1.3 for 2020, or at the end of 2020. And I think obviously some of this is that you haven't necessarily borrowed in the past for some of the capital needs that you've had and stuff. So now you're borrowing to help with some of those costs and purchases needs. The item number 6 is the last type of fund you have reported, and that's considered an internal service fund. It's your office supplies. So what that means, it's activities to serve purposes for internally for the county. And so generally these funds run about a zero fund balance because you're charging out the costs that it is to run that activity. And so you'll see there what the change was zero, because again, you expensed out what you or you brought in what you expensed out. So. The last thing we like to hit on that I had mentioned earlier is your long-term obligations. So as far as what you have outstanding and will need to pay in future years, you'll see that you do have both bonds and notes, general obligations outstanding. The notes increased obviously with the $990,000 debt issue that you had at the end of the year. And so your total general obligation debt is the million at the end of 2020. And every county, municipality, school district in the state has a debt limit, a general obligation debt limit. And it's based on the equalized value within the district. And so your debt limit is 186 million. So the 2.3 million that you have outstanding is 1.3% of that. So you've been under 1% for a long time. Again, you've had very little debt outstanding. And 1.3% is at a very good level too. Counties, obviously, because of the value that they're working with, are generally a lower percentage, but anywhere from 0 to 20% really is where the counties fall usually. And then the other couple items that we do summarize here as far as long-term obligations that have been incurred at this point in time, but not paid out or have been earned, is vested sick leave and vacation. And so you'll see the estimated amount of what your employees have earned to be paid out in the future. And I had mentioned how your total there is about 1.2 million, 1.3 million. And you do have assigned, or if you set aside a part of that fund balance in the general fund for $640,000 to help with some of those future costs.
That's it?
Yeah, that's the high level summary that we generally like to go over. Obviously, landing here on the last page, your debt's at a good level. You know, you have some capacity there, need be, and your general fund obviously saw positive move in 2020 to bring that fund balance back up. So,
How many counties do you do?
well, we do 10 to 12 in Northwest Wisconsin, but we, CLA actually covers a lot of counties, you know, more than half the counties in the
Yeah,
state,
no, I
but
understand, but
yeah.
you personally work on 10 counties?
not all 10 of them, but I'm familiar with most of
All
most
right.
of them. Yes,
So-
me and another partner split
Okay.
them kind of as far as.
So how do we look? How do we do?
I mean, again, like in the general fund, we really look at that fund balance and in the unassigned fund balance, and you're right around that 35%, what we would expect and kind of hope for. And then I know I had mentioned as far as kind of seeing the cash level go down in a couple other county highway departments and that
Right.
sort of thing. And so they're, you know, kind of looking at the issuing debt, you know, maybe they've tried to cover some infrastructure projects or that sort of thing the past few years without debt, and they're kind of going the route of needing to issue some debt too for that type of thing. So
Any other observations you want to share?
I know as far as the processes and controls, obviously small group of people that work with it, but obviously Mike does a good job, and he has things, you know, ready to go, and it makes it easy to get through the processes and procedures that we need to do in the audits. And no, as far as there's no anomalies, like why are you doing something way different than what we see at other counties? You know, it's really, I know that the counties get together in different, you know, so they're sharing kind of best practices and that sort of thing as well. But yes, if we do see anything, we certainly try to share that too with staff.
Okay. Anybody have any questions or anything? No. Thank you. Thank you, Melissa.
Thank you.
Mike, do you have anything to add?
No, I
Other
would
than
like to
thank God it's over, huh?
Yeah, like to thank everyone. Enjoy working with them.
Okay. Thank you.
Sounds good. Thanks.
So, Mr. Hoff, are you and Mike going to handle the allowable levy history and all of the rest of the things under C?
Yes, we are.
Good.
Use the term we.
Well, he's out in the hall, so it's all you.
Yeah.
Okay.
I don't know that he was going to go through each one individually, unless you want to talk about anything in particular.
So the budget is balanced, right?
It is balanced, and it is using, you know, some fund balance as we've done in the past.
Right.
And Mike can cover that a little bit more in detail, but yeah, I mean, the budget is balanced in the sense that we put it together. It'll be presented next week on Thursday, and there is use of fund balance, primarily because of the out-of-county mental health costs that are getting out of control in Health and Human Services. We'll touch a little bit more on that too, but we've had some discussion in Health and Human Services about that and how to tackle that and what the options are. The auditors mentioned, we do talk amongst the other counties, and this is a problem in other counties as well. We've talked with Petrowski in the past in our CAP team, when we go down to Madison, he's aware of the issue. This past week, we talked with Kyle Christensen and Sarah Dietrich from the Wisconsin Counties Association, and they joined our county administrators group that we meet every Monday on Zoom to talk about these kinds of things. So we talked about that issue with them. And Kyle is helpful and he knows the ins and outs of the legislative process down there. And we're trying to put together a package that, some draft legislation that we can bring forward to help with that cost, because other counties have the same kind of thing, especially in the north where we don't have the growth and net new construction to fund these huge increases in costs. It really is devastating to us. So even that, it's not a short-term solution, but it's hopefully some legislation that we can get through before the next budget, which is 2 years from now. So the plan that we've got in place, uses some fund balance rather than cutting services until we can be sure that we can either get a different funding alternative, or if we can't, do we cover that with some debt, or do we cover it by cutting services? So we're kind of in a holding pattern on that. But that's probably the biggest cost driver that's out of control. The rest of the budget, is kind of status quo, as it were. We've been fortunate, even through the pandemic, with revenues being sustainable and even increasing. Going into the pandemic, it was a nightmare scenario, but fortunately that didn't happen. We've been okay, but that's not going to continue forever either. So that's the 10,000-foot view. And Mike, now
We've got two other potential revenue sources hanging out there, don't we? The opioid settlement and also selling carbon capture.
Yeah. So both of those could be significant revenues. The opioid settlement, we'll see some paperwork coming to the board next month. The Attorney General for Wisconsin has agreed to participate in the settlement, so he will push out paperwork to the counties. That'll get presented to the board, and then you have the option of signing on to that settlement. The payments would occur over a number of years. There's a couple of different, I think one is over 5 years and one is over 9 or even more. But we could see those payments coming in even 2022. So there's nothing budgeted for that revenue in 22, so that would be helpful. The question is, just like the ARPA funds, do you have to, well, not ARPA, but do you have to use it on new programs, or can you supplant that with what you're doing to help opioid mitigation now? So that opioid money is coming in. The carbon tax, that could also be significant revenue coming in. It's a product that we have in the county that has a sale value, and we could sell those carbon credits. And hopefully Greg will be coming forward pretty soon with some information there for the board.
A number of other counties have signed up and are sold some of the credits. Iron County, Washburn County,
Yep.
Bayfield County. So
Yeah, and it is significant dollars. There's, of course, a different component to that besides the money, the political side of it, not political, but the economic.
the sooner we get it done, the better for us.
Yeah.
Is there a time lag on those funds? On the carbon credits?
Yeah, there is. So I don't know that we would see funds in 2022 if we did get signed up relatively soon.
Sorry, I guess.
So the size of the opioid funds, how much will that be? Estimate.
We don't know yet. I think Wisconsin is getting like 400 million. And the allocation to the state and the county. So Wisconsin is actually in a very, very good position as far as the allocation to counties because we passed the state through WCA's leadership proposed legislation that the counties would get 70% of those funds allocated to Wisconsin directly and 30% to the state. So that the counties will actually get those funds directly, which is not what has happened like with the cigarette money in the past and some other things. So that's going to be very beneficial. And of all the states in the country, that is the best allocation to counties that we've seen throughout the state. So we're in a very good position to get, a big chunk of that. But it's
Do they go
based
by
on,
population of the counties or?
well, it's population, it's death rates due to opioids. They've got all this data that's been accumulated through health departments on the impact of what opioids, cause the death rates and other things. And so there's some formula that's being developed that will allocate based on several of those factors.
Do they have an earmark, like you have to use it proactive to educate, or can we use it for a drug court?
Maybe drug court would qualify. We haven't seen the stipulations on that yet, but it has to be used for opioid treatment programs, those kinds of things.
Yeah, not just posters is what I'm hoping. That's
Yeah.
what I'm saying.
Okay, yeah. Well, it'll be significant dollars, so it'd be a lot of posters, so,
Wow. Gotta help our forest industry.
yes.
All right, so we digressed. It's Mike's turn now.
Mike is gonna take over
Yeah,
now.
so Mike, you go to what would be agenda item 9C8, I guess. Yeah, that one. Most of these attachments I put in the budget packet are the same ones I've shared with you each month. It's kind of what I use to kind of keep organized. This is kind of a overall summary of the levy. Top section, operating levy, next section is debt levy, special purpose levy, and then down at the bottom, if you scroll up, is the total levy. And so for next year's budget, the total levy that we're looking at right now is at $13,027,000. Again, the debt service is a little bit subject to change, so that could tweak a little bit. But that comes in at a 5.1% levy increase over the prior year, which is within what our 5-year plan was. That was our target, to try to stay at that 5%. We are coming in at that 5%, so I think we feel pretty good about that. That gives us the far column to the right. That gives us a tax rate of about $3.27 per thousand, which is down slightly from the year before, which is good, but that's largely because the equalized value, that $3,991,000,000 went up significantly. So that's what's helping our tax rate actually go down a little bit. But overall, on the levy, that's where we're at. So, feel pretty good about that. The next several pages, I really wasn't going to get into any detail on them unless you have questions, because we've looked at these each month and they've really, from a month ago to this month, they haven't changed too much.
How much fund balance are we using?
So the fund balance, we are using, there's $10,000 for the fair. We're carrying over fair funds. And then there's it's $1,275,000 that's in the budget to transfer from the general fund to human services to cover those other placement costs.
So
Hopefully
that,
we don't need all of that, but that's the number right now.
so that's on your budget adjustment sheet. Human services, 1.275.
Yes, that's the number.
Okay.
Yep, it is. So maybe that's what you were addressing when I stepped out, kind of where they're at with going forward on that particular number. Otherwise, the next page, if you scroll down, let's just, I'll keep going to agenda B, item B. This is just breaking out the levy by the different funds, breaks out in the special purpose, what's involved there, the libraries, ambulance, EMS. If you go to the next agenda item,
Just a minute, please.
Yep.
As long as Don is here, from Winter Library is put in, administration has put in what is requested. So Don knows. Thank you.
Yeah, I'm just here if we had questions, because last month I did it virtually and.
Right. Okay.
If you wanted.
Ms. Zilmer, you had some comments.
On the library, there's a statutory amount that the county is obligated to pay. And for some libraries, the county has been paying more. And is that supplemental information available for the public and the county supervisors to show what is the county's obligated to pay versus what's in the budget?
I don't have it in my information here today, but I think in Tom's presentation to the county board next week, that's part of his presentation to break that out.
Yeah, we normally put in
Right.
the amount requested and the amount in the budget. I don't know that we put in that calculation amount, but we can add an account for that, right? Because you've done all
Yeah, I
that.
think there's a couple. Okay.
We had it last year. I
Yeah,
know,
I
right?
think we did.
Okay.
Yep.
All right.
Okay, so to the next one. Yeah, so these are the changes we made to the budget. The starting point for us is the departments fill out their budgets, we compile them, put it together. That's our starting point. Then as we go through the budget process, we make changes. This is a summary of the changes that we made to get to what we are calling the administrator's budget at this point. Top section is changes to the operating budget. The next section is a few adjustments maybe on the special purpose levy items. Just kind of a brief summary of what we changed. You do see, Bruce, you asked about the $1,275,000.
Right.
That is almost to the bottom of the changes.
Right. What are the open items? Do we booked health insurance? We know what that's going to be, or?
Well, health insurance right now is booked at 10%. We're still working, I'll let you.
Yeah, so health insurance, we usually get right down to the wire, and this is no exception. We do have better news than we had in previous years. The last couple of years, we're really, we've had some high claims, and I think a couple of years ago, we were with WCA Health Insurance, and they gave us like a 21% increase. So then we had to switch to Anthem,
Right.
Which was the only carrier that gave us a quote a couple of years ago. And so we've been with them a couple of years. This year, we did get a favorable quote from WCA again. So we'll be moving back to that insurance. We're at currently about 4.5% increase over the previous year with no changes in coverage. We're still analyzing some of the details on that. But that's good news as far as the limited increase that
Right.
we were hoping for. So
So we budgeted 10%?
we had, originally I think we budgeted 15% because you never know. So then when we were starting to get some favorable news back from our consultant, we dropped it to 10%, which allowed us to juggle some other things around. And so it was at 10% up. I mean, it still is because we just got the news on the health insurance. So, I mean, we've got a little bit of room that's still in the budget. And we'd like to leave it that way because that'll help next year, saves the bumps in the road. But it does help us on the budget, that's for sure.
So we have a cushion then in the budget. What would you guess? 40,000?
Yeah, I mean, it's probably a little more than that, depending on how we come out with the negotiating here. But yeah, there's some cushion there, which is a good thing.
Yeah, so we've got cushion and the contingency, correct?
Yeah, there's in contingency, there's 50,000 specific to contingency, and then there's almost 225,000 in there for personnel.
Right.
Increases.
So the unallocated part of contingency is 50.
Yes.
So 50 plus the cushion from health insurance.
Yeah.
Okay. Right.
So now that we have that number, and it is good news for the employees, the health insurance, I think they liked working with WCA Anthem. It's a very large company and it's pretty cut and dry. It is what it is. And we've had some issues where people had some high claims and were responsible for, a lot of the cost on some of the things that happened over the past year. So I think it'd be better off with the insurance. It's at a favorable price compared to what we've seen in the past. So now we're trying to, fit that in and then develop the compensation, the grid, how we've been talking about a couple of different scenarios. We've got some dollars set aside, just how we allocate that out. We'll be ironing that out and getting that before you on Thursday as well.
Mike, where do you want to go next?
Okay, let's move on then if there's no more questions here. The next item, so this is EMS, the ambulance levy collection. Remember, the ambulance levy is outside of levy limits, but I did provide the calculation of how we arrive at what we're levying. So the top portion is kind of the operating budget. And then the lower section there is capital that we're planning to purchase for 2022. Looking again, if you look at the total capital, it looks like it's up $100,000. It is up $100,000 from the prior year, but it's more in line with what we had been doing every year, except for this year. This year, we did not purchase an ambulance, but we are going back to purchasing an ambulance for next year.
Zoomer, you had a comment on this?
Linda Zolmer, Edgewater property owner, and Edgewater is served by the Birchwood Four Corners Emergency Services District for ambulance. And in attending those monthly meetings, I am hearing more and more that our small ambulance service is providing mutual aid to Sawyer County and responding to towns like Meteor and other towns. So that's a functional concern I have with EMS. On the financial side, though, what I don't see in this schedule is, first of all, what ambulance collections are expected to be for services, how much an outstanding receivable is, and also is this committee and the county going to address what the county has been assessing the Washburn County towns that Sawyer County Ambulance serves, which are assessed at a much lower rate than Sawyer County towns, and Edgewater pays for Sawyer County Ambulance and they don't get the response. So I guess I'd like to see the financial information that's not on this schedule, as well as a discussion of how will Washburn County towns be charged, and if there is any consideration for the town of Edgewater, especially now that the service we're paying for is responding to other Sawyer County towns. Is that information going to be available, maybe?
I can provide the financial information. I can't really respond on the services between different entities, other than to say it's common, it's not unusual, and we serve other entities also when they're in need. That's something they can probably.
But is there a change in the formula for how, are you still serving the same Washburn County towns? How much are they getting billed, on what formula? And is the county going to make those charges more comparable to what Sawyer County towns are assessed. Okay, and would this committee take action then on any change in formula?
I think that's more admin, isn't it, Mr. Hoff?
Well, we talk about that in public safety.
Public safety, okay, thank you. Is that on the agenda for public safety, that specific question?
Hadn't contemplated any change, no.
Okay,
Moving on.
Moving on would be great.
What's that?
Moving on would be great.
All right, so the
I gotta
next,
get to work.
the next item is our schedule of debt payments for next year. 1, 2, 4, so there's 4 debt issues listed there that we will be paying. The 4th one over that says 2022 capital borrowing, that's borrowing for next year's equipment. We usually do it mid-December and then try to make our first payment early, like March of the following year. First debt listed there, that's the jail debt. That should be dropping off probably in a couple of years now. I think 2024 is the last year payment on that. The ambulance debt was set up as a 10-year debt. The 2021 debt there, this year was the first payment on that. Next year will be the last payment on that. And then we'll be starting the first payment on that last column borrowing.
okay. FTEs,
At FTEs, that's just employees by department, excluding what we would call LTEs or limited term employees. This is kind of trying to focus more on the permanent positions that are there.
Ms. Zimmer, did you have a comment on FTEs?
Well, I just briefly, there are full-time equivalents, and I don't know that this breaks out sufficiently what a FTE is between your 7-hour and 8-hour employees or whatever, and then an actual head count of the number of employees that make up the FTEs. I think that would be beneficial, and I don't know how that plays into who's eligible for benefits and who's not, but there are financial implications to that. Thank you.
Thank you. All right, any questions on FTEs? Mike, we probably should move a little bit if we can. Anything?
Oh, yeah. I have no comments. These are, there's no difference as far as counting goes between a 7-hour person and a 8-hour person. They're both considered full-time. Next page. Again, this is personnel costs by department. It's just information. Next one, I've shared this probably a couple months ago for you. This is just equalized value and net new construction by the different municipalities. You can kind of look at, see if an individual municipality went up or down with their net new construction. Moving on. Courthouse fees, this is just try to put this out every year, try to update it every year. Every department that charges fees that are county related fees, right in this document. The last report on here is the capital improvements. I'm trying to share this with you each month, at least in summary form. So this shouldn't be new information. I'm moving quickly because I do know we need to get to the yeah. So this is a list of the items that we are planning to borrow for the 2022 budget. I guess the only item I would point out on here is you notice under the highway section, it says reallocate highway bridge aid, negative $128,000. We did budget $128,000 2021 budget. We borrowed for it. Subsequently, Highway was able to get a grant for that particular project. So in a sense, we're carrying over the $128,000 and going to apply it to the 2022 budget.
Okay. Any questions on capital improvement funds, okay.
All right. Okay, so the Board of Commissioners, Public Lands, so in prior couple of years, we put out for bid to local banks to fund our capital projects. This year, we're recommending using the Board of Commissioners, Public Land as a state agency. Planning a 2-year debt. Part of the process of using board is we have to pass a resolution that they have attached on here. We're planning to take this to the county board next week, get it approved so that we can go forward with processing this loan.
You need this committee to,
I think this committee should sponsor it and move it forward.
yeah, no, I think that's what, the way the minutes are, excuse me, the agendas look
Yeah.
written, okay.
Yeah.
So anybody have any questions on the resolution? Yes, ma'am.
So you're saying that we've always in the past gotten local banks, but now what would be the benefit to switching to this and taking away from our local economy?
When we've gone through with the local banks, the legal costs we've incurred have been right around $5,000. We can do this and not incur any unless we have court counsel review, but that's up to Tom, I guess. If we need that. The Board of Commissioners of Public Land, they accept our application. They forward it to, I believe, the Attorney General, is it? At the state, they go through the loan to make sure it's compliant, and they get it back to the board and say, yeah, it's good to go. So all we have to do is pass the resolution. We're not incurring those legal fees.
But if we already pay for legal counsel, why wouldn't we just use our legal counsel?
Our legal counsel is not on a retainer, it's as used, so.
My only concern is taking away profit, in the interest level for our local banks when they're providing us money as taxpayers. We should keep it local instead of state. That's my concern.
Yeah, and we can. I'm just saying it costs us $5,000 to do that.
Cost us more if those banks leave our community.
Okay. So, wanna make the motion, given,
Make a motion, Rep,
okay,
to go the way that Mike is.
to follow the staff's recommendation. Okay, all right. Okay, more discussion. Dawn, do you have a comment on this?
Nope, just listening intently.
All right, okay, so motion made and seconded. Any more discussion? If not, all in favor, aye.
I,
Opposed, nay. You want your nay recorded?
I like my name recorded.
Okay, all right, motion passed. We'll pass it on to the county board for action. Okay, Mike, have we covered everything you wanted?
I think so, yeah.
Okay. You've got the public hearing notice. That's just a formality. It's already been published, hasn't it?
Yeah, so it's, I put it in your packet just so you are familiar with it, you see it, maybe somebody on the street catches and asks questions for it, you've seen it, it should show up in the paper this week. We should be covered.
Okay, so we complied all of legal requirements of the publication and stuff. Okay. Then is it appropriate to go on to the budget watch list, or do we have one?
I did put one together. In general, on the revenue side, again, we're having a strong year this year. Sales tax has been very good this year, exceeding what we anticipated. Stumpage early in the year was really good. We're still just about at budget and probably going to exceed budget, but I think it has slowed down a little bit, at least on the collection side. registered deeds fees is high, zoning fees are high. Ambulance fees, the collection side of things, we need to review again.
So we're gonna be on budget for ambulance fee collections.
I think we're gonna make budget, but I really thought I think they're just having some trouble maintaining staff, and it's kind of impacting our collections is what I think is going on.
So
It's not so much because the numbers of calls are down.
This is the service we're using,
Yeah.
so
Yeah.
they're behind is what you're saying?
I think so, because our collections, we recognize the revenue as we receive it,
Right.
and collections have slowed down the amount we're receiving the last, for sure, couple of months.
Right.
Do we send those out for a collection agency? Who collects the delinquent?
They do go to a collection agency.
How delinquent do they have to be?
I don't know if I can answer that.
Yeah, there's a set number of letters that go out. I forget the exact process, but there is a process. They get a bill, they get follow-up letters, and then after the third or fourth, whatever, then it gets turned over to the state collection agency. So they can, do tax intercept or other things to do the collection. If it's not within the state, there's an alternative collection agency that is used as well. So you need a social security number or I think social security number, driver's license or whatever to get it to the state collection agency. If they don't have that information, then it
So
goes
how
to the
many, what percent of our fees are referred out? Do we collect most of them or?
Well, no. Most of our fees that we receive come from Medicare. And you only get 35 to 40% of which bill from Medicare. And that's the largest share of our collections is Medicare. We do get some private insurance and some personal pays, but it's a much smaller percentage.
Any more comments on the budget watch list?
No, just, the expenditures for the most part are pretty constant. I mean, it's what we budgeted, relatively pretty good.
Right.
How it turns out, it's the revenues that tend to fluctuate.
Yeah. Any more questions for Mike and Tom? Okay, any other future items? Anything else we can talk about? Yes, sir.
Just one comment, this packet that's on the table is from the construction meeting that occurred yesterday. So we had another meeting as we do every other week, trying to refine the details of the construction plan. So these are the latest, greatest plans and several pages of very detailed documentation that I'm sure you would like to read through before you leave.
So we can take it with us because the admin committee is going to meet at 10. All right. Well, yes.
Last month we talked about that property that we were negotiating. Tom, did you meet with Sheldon?
I did talk with Sheldon. He's in the midst of doing that. And then when he gets a final number, we'll bring that back to the.
Right. Okay. Well,
Where's this available to look at later? I don't have time today.
Yeah, I think I've got some other information that I'll put in the board packet.
Oh,
Yeah, I mean, this is very, very detailed, but that's a higher level stuff. I'll put it there.
okay, thank you.
Mr. Keefe, thank you very much. You balanced the budget again. I always say it's magic, but you guys do magic. We're adjourned. Oh, yeah.